Hey guys, I got one chart for you today, and in some ways, it's probably the most important chart in the world. So, on the screen, this is the yield of the 10-year US Treasury. Um, Everything's priced off the yield of the 10-year Treasury. It's the most stable investment on the planet. People consider this the free rate of return. And the reason I have this up is if it's not already obvious, it has fallen off a cliff. And I've talked about this before, but I want to kind of look at this in maybe 1 decade chunks. Because today, if you give the US government $1 million, they're going to give you back $5,300 a year, right? So that's what the US 10 year is yielding. It's yielding 53 basis points. Now, depending on where you live in the country, that's a negative yield. Certainly, if you live in Silicon Valley, which probably has an inflation rate of 4 or 5%, that means you're going to lose about $45,000 of purchasing power a year. Now, Silicon Valley is a very high inflation place, but the point is, even at 53 basis points or $5,300 a year, um, that drives pricing of every other asset on the planet. And whether you believe the 10-year treasury should be yielding 53 basis points or not, that kind of sets the pricing mechanism for the rest of the planet. And I just kind of put this in perspective. In 2010, if you gave $1 million to the US government for 10 years, they'd give you back $38,000 a year for a decade, like $380,000 over a decade. Today it would be about 53,000 and change. Back in 2000, if you gave $1 million to the US Treasury for 10 years, you'd get $65,000 a year. So if you did everything right and you retired in 2010 and you put your 1 million or $2 million in 10-year treasuries, let's just say, sake of argument, you're only going to live 10 years, you're going to make 65,000 a year for every million. And that's not happening today. Now you're making $5,300, not 53,000, but $5,300. So that drives every other price on the planet. So when someone says to me, or when I hear the stock market's overvalued, I think overvalued relative to what? Making $5,300 a year from the US government? Hold on, guys. Something just popped up and I want to get it off my screen. Hold on. Right? Because these are the choices you have, right? You can either have your free rate of return or put it into gold or put it into the US stock market. Glad you mentioned those two. So, just for reference today, the S&P 500 index is at about 3,350. In 2010, it was at 1115 or 1,115. Now, just super quick math, about two-thirds smaller than what it was today. And back in 2000, when the 10-year was yielding or giving you $65,000 for every million, the S&P was at 1460. So the lower that yield goes, the more it's going to reprice every other asset on the planet. And that means people are going to maybe keep their money in the stock market a little bit longer, or they're going to put a little bit more in, and that's going to drive prices up. So when I hear people talk about how something's overvalued, I just always think like relative to what? And if someone says relative to historic numbers, then you have to also think about what was going on for other historic numbers at the same time. And if you've been paying attention at all, you know that the Robinhood traders are absolutely in control of silver right now and probably gold too. And that is skyrocketing to the upside in just an insane Robinhood trading like way. But that leads me to the price of gold. So the price of gold today is, let's see, I'm recording this close of market on Thursday, and gold is about $2,070. Now, for reference, in 2010, it was about half that. It was about $1,100. And back in 2000, gold, you could get 1 ounce of gold, drum roll please, for $282. So again, when the yields continue to fall, that reprices everything on the planet. And this is not just a US yield thing. I've talked many times and I've shown you German yields. They're negative. The 10-year German yield is negative, and the Japanese 10-year yield is probably about 2 or 3 basis points, but they are committed to keeping it at zero. So as you go through and you hear all this news and this information about what is and is not overvalued, you have to understand that nothing happens in a vacuum. And the idea this week was just to maybe practice more of not being so attached to what something should be doing, but really noticing what it is doing relative to other things. And it's one of the things that I train my training clients to. You can't just tell someone to be unattached, but just start to show them how to invert it and how to look at it in other ways to say, like, hey, maybe we can have the S&P 4000 or S&P 5000 or S&P 6000 or S&P 10,000, because if there's another 3 or 4 trillion dollars of expansion in the Fed's balance sheet, the money's going to go somewhere. And gold, when gold priced in dollars was the last gold mechanism to hit lifetime highs. Gold was hitting lifetime highs in the pound and the euro and the yen way before this past month. So this has been happening, meaning this repricing has been going on for some time. And it makes sense that gold's been making new lifetime highs for over a year, when I said a moment ago that the German 10-year is yielding a negative yield. And that's not adjusting for inflation. That's the actual yield. So think about that more as you go into investing and you hear all this news hitting you. Just start thinking, okay, it's expensive relative to what? Thank guys for being in my world. Please subscribe if you have interest in seeing more, because it helps. Also leave a comment. I read all comments and then I collect them and I do kind of a almost like an ask me anything, and I do a whole video and answer all those questions for you. So guys, have a great weekend and I will speak to you next week.